Our global business editor, Udayan Mukherjee, joining us now. Udayan, after a brief respite, seeing some new levels being touched, it looks like we're back on the downside. Slipping today quite heavily in trade. It's those same old worries that are continuing to crop up again. They're not going anywhere. Those recession fears, rate hike fears. What is your opinion on really what markets are reading into currently?
Well, a bout of heavy profit taking was inevitable, Abha, because the rally has been spectacular. I don't think any of us thought that we would be knocking on the doors of 18,000 on the Nifty quite so soon. So, I mean, if you just see it in perspective, the low was somewhere close to 15,000, 15,200, and we came almost to the doorstep of 18,000 a couple of days ago. That's almost a 3,000 point Nifty rally in the span of just about a month or so. So the rally has been absolutely spectacular, and therefore a heavy bout of profit taking was quite inevitable. And you could see that that was going on as well, even from the domestic investors, because they have been the biggest supporters of this rally. FIIs have also come back to the market, but the biggest support has been from domestic investors. But through the month of August, there has been some selling on the margin from even the domestic investors. And you could see that the first signs of profit taking from some of the smart money was already taking place after a rally of such magnitude. But I think what has brought matters to a little bit of a head over the last couple of days is those minutes of the Fed meeting, which seem to suggest that there would be many more aggressive rate hikes in the United States. And as a consequence, we've seen the dollar index strengthen once again. The other thing of note is that global volatility had actually subsided very significantly. And if you chart the CBOE VIX, which is the measure of volatility in the US market, that had collapsed to levels of 18 or 19, which is around the level where it typically bottoms out. The highs were around 35, 36. But over the last couple of weeks, that had come down to such low levels that a kind of a spike in volatility was almost inevitable. So if you put it all together, the strength of the rally out here, the notion for profit taking, because as you mentioned correctly, many of the worries have not exactly gone away completely. So the market had rallied, but now we have to deal with some of the old demons once again, and therefore the market's pulling back. Now, I think the strength of this pullback or the intensity of this pullback will tell us a lot about the texture of what has happened over the last 1 month. Because often, as they say in the market, the strength of the market is in the kind of pullbacks and whether it takes us back to those old lows or it forms a much higher low this time round. I don't expect the market to go back to 15,000 immediately, but we will see where this pullback takes us, and that will give us a sense of whether this was the real thing or it was just one of those spectacular bear market rallies. Jury's out on that, but I think this will be a very, very interesting phase for the market to watch once the first flush of the profit taking is out of the way.
If you like the video, do like, comment, share and subscribe.